Are you feeling panicky because of what's been going on in the stock market over the past week? If so, I don't blame you. Maybe you've even lost a lot of money. I know I have. I have lost a great deal of money in stock value over the last week, but I am not panicking. I have seen this movie so many times, and if you just give it time, stocks usually rebound. I have been through many crashes. The worst one I've been through was the dot-com bubble in the 90s. That is the one where we lost the most money. And a lot of those stocks were overvalued, and those stocks did not come back. So check with your financial advisor and be sure that your portfolio reflects what the market value should be when it's not disrupted like it has been recently. A lot of people are blaming tariffs, but what you're seeing is the stock market reaction to the idea of tariffs. The stock market reacts short term to anything it doesn't like. I want you to think back to the worst breakup you ever had in your entire life. I know which one it is for me right away. I had to break up with an orthopedist I'd been seeing because I just couldn't stand him anymore. So think back to your worst breakup and think about their reaction when you said the dreaded, "We need to talk." And think about how emotional that person became. Now, the stock market is like your out of control ex. Okay. The stock market is not the economy. It doesn't reflect the future of the economy. It reacts in the present to what's happening. The key to surviving a crash is to check with a financial advisor. Don't take advice from random people on TV or your roommate. I mean, unless your roommate is Warren Buffett. Don't take advice from anybody that you don't know for sure knows what they're talking about. So, the best thing to do is just to wait and see what happens here. Tariffs are a negotiation tool. I have seen situations like this before, and this is how I am going to handle it. I'm going to sit and wait for it to rebound. Now, one reason why I can be so calm is because I'm diversified. Okay. When you're diversified, you have less risk. For anyone who doesn't understand what I mean by diversification, here are just a few examples. You can even diversify within the stock market by not having all your money invested in one specific industry. You can invest in CDs and bonds, mutual funds, ETFs, and real estate. Factors to consider: your risk tolerance, financial resources, your age. As you get closer to retirement, you want to become a little more conservative. And it also depends on other factors going on, such as your financial resources. And it's okay to consider your areas of expertise if you know a lot about an industry. Just be sure that you're still balanced. Diversity really is the key to surviving situations like this. And if you're close to retirement, I do feel for you. If you're not diversified and you're just gonna like try to hang on until all this stuff comes back. The stock market is a long-term investment. I've had some stocks since the 80s and 90s. I'm serious. And there have been stocks, that didn't come back. There have been stocks that have gone so well. Now, when you're in the stock market, it's a long-term investment and you assume that risk, but you have to offset it with other less risky investments. I want you to know that I'm a consumer advocate. My loyalty is to you and not to any partisan individuals. So you can always count on me to tell you the absolute truth. Thanks for joining me. And if you've got a comment or a question, drop it down below and I will get back to you.